Yeah, you can start anytime.
Okay. Don't do clap.
Yeah, you can clap.
I got limited.
Okay.
Welcome to the 5th episode,
Four.
4th episode of the Asian Flip Flops podcast. Alright.
Hello.
Hello. So we have here with us Derek again, both of us.
Hello, it's always the two of us.
Yeah, it's just the two of us. And we'll just be chatting about things today that may or may not excite you. Starting with income tax, right? The very, very interesting thing about income tax that was recently just launched under the assurance package by Mr. Wong.
Who is Mr. Wong?
Mr. Wong, right? Hearsay gonna be the next PM.
Our next Prime Minister, Mr. Wong.
Yeah,
Mr. Wong, if you are watching this,
please
hi.
come to our channel.
Yes, please come to our channel.
Please come to our channel.
We'll love to interview you.
Yeah, and talk about the assurance package. Alright.
Yes.
So what is so assuring about the GST? The income tax increase.
So apparently, based on certain articles, right, there's gonna be an increase in income tax. In fact, from 2024, increase in marginal tax rate as follows: annual income exceeding 500,000 to 1 million, increase from 22% to 23%. And annual income exceeding 1 million, increase from 22 to 24%. Non-resident professionals are subject to WHT of 15% on gross income from the profession. What is WHT?
Okay, so WHT, I think it's called withholding tax, or basically just tax lah. So basically, they don't care how much the person earns who is not a Singaporean, right? You're gonna be taxed 15% flat as long as you stay and become a tax resident in Singapore.
Right. So, okay. Now, after reading this article, right, what do you think about this increment of tax from 22 to 23 and 22 to 24, depending on your income? What do you think? Because you are the one that's in that annual income range, you see.
I cannot relate. Wow, clickbait. Actually, I was gonna say it doesn't affect me because it was lower than that, right? Yeah, so it doesn't really affect me.
Because you cheat the system, right?
I cheat the system. Yeah.
Mr. Wong, you hear that or not? You cheat the system. Faster.
Yeah. If I earn that much, right, I think it won't be a problem. It won't be a problem paying taxes lah. Let's just put it that way.
Okay.
Yeah, it's a happy problem. But I guess most of the people will be happy, right? You get to see the wealthier get taxed more and contribute back to the Singapore society.
Well, how much is 23% of 500,000?
23% of 500,000. I saw on the tax bracket area, I think it's $40,000 over $1,000.
$40,000 over $1,000.
$80,000.
That's a lot of money.
Okay, so let me just read it out from the article that I saw on MOF, right? If you earn $500,000, you're expected to pay under the new tax scheme, $84,150. That's more than what I earn in a year.
Hey, wait, what? You just said if you earn $500,000,
you're expected to pay $84,000 in taxes.
but I thought you did a calculation.
It's right there.
Oh, okay.
It's right there. And then if you earn $1 million, you're gonna have to pay $199,000 in taxes. $199,000.
199,000.
Yes.
But then it says here annual income exceeding 1 million. So assuming you are at $1 million.
Yes. If
22 to 24%. So meaning to say 1 million or 24% should be 240,000, right?
yes, but it's a tiered scheme, ma. So that means, right, if your first 20,000 you don't get taxed, then from $20,001 to 30,000, you get taxed.
Ah, oh yes.
That's why Singapore calls it a progressive tax scheme, right?
I see.
Progressive tax scheme. And therefore, it doesn't affect us because we are not in the scheme. I'm not in the scheme. Derek, I'm not sure.
I'm not in the scheme. You know, the fact that I don't even know anything about income tax, right? It shows that I'm not in the scheme, you know?
Because he pay until he forget how much.
No. I'm a poor man. I do not have I don't make a lot of money, you see. So the government is being nice to me.
From the article we see, right, from MOF as well, this increase, right, that affects 1.2% of the wealthy people in Singapore, right, is expected to generate $170 million extra revenue for
That's a lot of money,
for Singapore.
What can I do with 170? Yeah, what can I do with that amount of money?
You can probably get a lot more subscribers.
Like, subscribe.
Yeah, remember like and subscribe.
I like that segue to like and subscribe.
Yeah, so $170 million is a lot of money in our sense. But I think if you were to look at it from maybe the Singapore perspective, maybe $170 million is not a lot.
Why do you think it's not a lot?
Maybe you can build like half a development property and that's about it.
Okay, now the real question here is, why is there an increase in income tax coming 2024?
According to what Mr. Wong says, right, that there has been an increase in wealth tax, right? Wealth tax, because they want to tax and have a fairer system that makes the wealthy pay more for what they are consuming in Singapore. And then they take the money and maybe they push it and give it to the poorer people. So those of you who receive PayNow amounts from $100 all the way to maybe $900, right?
The assurance package.
The assurance package.
Yeah.
The 净户率, right?
The 净户.
The 净户.
Yes, I like that.
Yeah.
No, not 净户. The 阿公率. 阿公率. That's what people like to say.
Yeah. So that's the amount that they come back to us, right? Mm-hmm. They give us one drumstick and they take one chicken from us. No. Yeah. So that's I think that's what happened. And on top of that, we see the article they write they did a couple more increases, including the GST, right? Wow, this GST very sensitive. What do you think about it? This GST is expected to increase 1% from 2022 to 2023 and a second increase from 2024 onwards from 8 to 9%.
So if, I mean, we have no views on this channel yet, but if there are overseas viewers watching this, right, who's not understanding what we are talking about, GST stands for Goods Service Tax.
Goods and Services Tax.
Goods and Services Tax. So essentially, they tax you lah, right? You buy your food, they tax you. So this GST, they tax at 7%. Coming next year, it's going to increase by 1%. And then the following year, another 1%. Is there another 1%?
No more, it's just 9%.
So then we will stop at 9%. So this slow increment is to help Singaporeans and to be prepared financially for this GST increase. So, what are my thoughts on this increment of GST?
So, hold on to your thoughts, right? Before that, right?
Holding on. My thoughts.
Your thought,
holding on to my thoughts.
Mr. Wong says, right, this particular increase 1%, right? It's gonna bring in about $1.6 billion. $1.6 billion. So million is 6 zeros, billion is 9 zeros. So that's the amount that they're expecting, right, to bring in with this GST hike.
Okay.
A lot of money there, $3.5 billion, right? And it says, Mr. Wong says, it's because there has been increase in additional healthcare spending and GST revenue is actually used in all these social expenditure. So let's not talk about what social expenditure lah. Let give that to the government. How does it affect you?
Okay, as of now, I have not seen the impact yet because we're still in 7%. But coming next year, 1st January, after the fireworks, Happy New Year and Happy New GST. Because of this small increment, I don't think it's gonna impact anybody immediately. But when the following year hits, right, it's actually gonna impact a lot of people. So when the GST hits 9%, in my opinion, it's gonna affect a lot of people, including myself, because I'm a poor man. Can you imagine you go into a store to buy a $2? No, let's just use $1. No, sorry. Let's use $10, alright? It's too difficult to count. Now, $10 of an item, and then you pay 9% of GST. There's additional 90 cents. Now, it may not seem a lot, right? But do you know that back then, 90 cents could get you a cup of coffee? And now, you're just using this 90 cents to pay the GST. And I feel that it's going to affect a lot of people. And it's going to be very expensive. On top of the fact that inflation is rising now,
Right.
everybody is doing something about it to reduce, to slow down the inflation. But I don't think it's going to be anytime soon. So in a sense, I think GST is something that we cannot avoid, the increment of GST. But it's definitely going to affect a lot of people. Maybe we'll see a lot more people crying. That's my view. So what is your view?
My view, I'm just thinking from an annual perspective, right? Let's say I spend about 50,000 a year, 50,000. So maybe I spend about $4,000 just for spending lah.
Wow, you spend 50,000 a year.
Example lah,
果然是有钱人 rich man.
Rich man.
Rich man. Okay.
Good. Then, if an 1% increase, right, means I will have to pay extra $500 a year.
Quick
Right?
math.
$500 a year just on this extra amount. That means 可能一个月 or 1 month, every month, right, is maybe $30-$40 extra for me.
Yeah.
$30-$40 extra for me. I don't think we'll see that much of an increase. Like we won't feel as much of the pain lah.
Why?
Yeah, because I think both of us are at a level where we can rent a space, talk about podcasts. So basic living is not so bad. But for those who are at the lower income where you struggle, right? This $40 per month, right? It's gonna impact them quite a bit, right? Yeah.
But don't you think that because there's GST, there's also income tax. Don't you think that the increment of income tax is more than enough? In the sense that there's no need to increase the GST. It can stay at 7%. Because at the end of the day, the objective of the GST is to help the lower income family. So the increment of income tax already specifically stated that it's meant for the higher income to support the lower income. So why is there still, in your opinion, why is there still a need to increase GST?
I think because the quantum that you get from the wealth, right, the wealth taxes, is not as much as GST. From what Mr. Wong says, right, it's 170 million from the wealth tax, right?
Which is 500,000 and above.
Yes. No. So 107. So with this increase, they will bring in an additional tax revenue of $170 million.
Yeah, which is only applicable. This $170 million is coming from anybody that's earning 500,000 and above,
Yes,
right?
correct. Okay. But then this GST broad-based increase, right, is expected to bring in $3.6 billion worth of money.
Okay.
3.6 billion. So I think that is the reason why they have no choice but to increase the GST. And then they give us money to say they want to support us with this increase in rising inflation.
Honestly speaking, with the assurance package that comes to most of the Singaporeans, right, to get ranging from $100 to $900, and it's a one-time payment. Do you think this package will help the lower income family to handle GST?
I kind of trust the government got do their homework lah.
Okay.
But to be honest, we wouldn't know we wouldn't know because these people may be struggling and they may not even and it may not be even sufficient, right? Even their expenses. But based on what I see, if let's say you get $900, it should be able to offset maybe the 2 years because if you spend like 40k or 50k a year, right? 1% increase is 500 So you can offset the next year one. Then the next year another 500 increase.
So then after that what happens?
Then after that, I'm not sure. Maybe the government will come up with a permanent GST rebate for the lower income family to help them with this. And I think that's a pretty interesting way of taxing the people who can purchase and giving it back to the people who are low income.
Now I have a question.
Yes.
Okay. Now with understanding the sole objective of doing this increment is to help the lower income family, why don't just leave GST at 7% and then increase not increase like because there is this gap where only 500,000 and above income earners are going to have an increase in income tax charge. Why not scale this to be a bit further in a way that maybe from 100,000 onwards the income tax percentage will increase?
Then you'll be affected already.
I really thought I only earn 20,000 a year.
How can it be?
No, so here's my question, because at the end of the day, right?
Yeah, understand.
We are supposed to help. We are supposed to help lah, right? The lower income family. So by getting the wealthier people to pay for the tax, so that this amount can be supporting the lower income family. So why not just scale up widen up the income tax range and then increase from there?
Possible.
Then stay put at GST at 7%.
Possible. But I'm not sure why. But maybe this approach doesn't generate as much income for the government. That's my guess lah. That's my guess.
Okay.
But, also increasing income tax is very sticky, I feel. If let's say they increase in my range one, right, I will fit. But I'll be angry lah because that's a lot of money on my side lah.
But you are affected by the GST as well. So what's the difference?
But the GST, I get back money. It feels good that I get back a permanent amount of money. That's what I think lah.
But so you're saying the GST voucher or the assurance package purely it comes from the GST charges?
I think so.
Then what about the income tax?
The income tax is just extra revenue, 170 million ma. But them taxing just a bit more, right, for 500,000 to 1 million dollars, right? This range doesn't even bring them so much revenue compared to GST.
Okay.
Like how much, maybe my question is, right, how much do they have to increase our income tax for it to match GST? Maybe by then, right, nobody will be Singaporean already. Too expensive.
So you are saying increasing the GST, the Singaporeans will still want to be Singaporeans?
Yeah.
Why?
Because we get rebate if you're only Singaporeans.
But then the increment of income tax for a broader range, you also receive rebate what?
You don't receive rebate from tax what? From income tax, you don't receive rebate. You can do tax relief.
Okay.
Right? You can do tax relief. And before we go into tax relief, right, maybe you think about, from your point of view, right, is there anything that we can do to circumvent this 8% that's coming up maybe in 2 to 3 weeks time?
Was there anything I can do?
Yeah. So one of the few things that I thought about lah is like your insurance premiums. If it's due soon, right, don't delay already. Faster pay, and then you won't get hit by the 7%, right?
Yeah.
Faster pay, your insurance premium lah, whatever that you can prepay beforehand before the 8% GST kicks in. pay first. Pay first and save that 1%. If not, you're gonna 1%.
So are you saying I should go to supermarket now to buy 1 year's worth of supply?
Just wait.
Because everything 7%. Is that what you're sharing?
Possible. Yeah, so just some food for thought maybe about thinking about this.
So in my opinion, I'm a bit more business-minded person in a way that I'm always constantly thinking about how do I generate more income. I mean, of course, the reason why I'm thinking like that is because understanding from the previous episodes, I talk about my debts and anything. So naturally, I already have a very high expenses. So I'm always constantly thinking about how to generate income, more revenue. So naturally, this increment of GST, why I say it doesn't really affect me now, it's not because I'm rich. It's because I'm already thinking what I'm thinking when GST is at 7%. Is how do I generate more income? So I think if you ask me how do I ensure that this, I'm prepared for this 8%, naturally I would say you think about how to make more money.
Interesting.
As much as many people don't like the fact that I gotta work for many hours to be able to sustain a lifestyle I want, then after that I don't have time to really enjoy the lifestyle that I have. But I think you think about this, you cannot avoid inflation. It's constantly gonna be here. The coffee that was back then 20 years ago was like 60 cents. Now you want a kopi peng, it's like iced coffee is like $2, $2.50. So I think the question here would be how can I make sure my money follow the value of the money, right, is growing at the same pace, at least for the inflation standpoint. I mean, for this case will be GST. So that's how I think, I feel that that's the only way to be able to fight this upcoming increment of GST. What do you think?
Good thought process. I think instead of focusing on the cost, right, because you can't confirm that, why don't we focus on something that we can control?
Yeah.
Right? Which is the amount of money that we can bring in for our own income to target and fight off maybe this $400-500 increase in GST, right? For those who are spending $40,000-50,000 a year, right? Can you increase your income by that amount next year, so that you can actually earn this?
Yeah.
Right.
So I feel that this is what people should think about. Now, there are two ways to go about this, right? It's either, okay, GST 8% is coming, 9% is coming. I'm going to think about how I can increase my income to sustain the lifestyle that I'm currently having. Or, if you cannot increase your income, will you be willing to reduce your lifestyle? If you're not willing to do that, go and get a second job.
Come join us at the podcast.
Yes, come join us at the podcast. We are not hiring yet, but come join us at the podcast. But yes, I feel that that's the only way that we should think about it. Think about this GST in a more positive light than to keep thinking, the GST is coming. You 要再花钱, it's gonna increase again. Government always take my money. Look, I don't know if the government is taking our money to do whatever they are doing. I don't know anything behind that. But what I know is, on ourselves, what can we do about it?
Okay.
That's how I feel. So naturally, I would say, make more money.
Right. Interesting. Okay.
What would you do?
Wow, I would focus on that, but maybe I'll also explore this thing that people have been talking about for quite some time, right? It's called the Supplementary Retirement Scheme.
Supplementary Retirement Scheme.
Basically, it's a voluntary scheme that the government has actually provided, right, for us to actually deposit money in for our own retirement, and in exchange for that, right, we can save income tax. So maybe, right, a food for thought is this: we save on the income tax to pay for the GST. We save on the income tax to pay on it. Then maybe net, right? We don't spend it. We still spend maybe the same.
No, but there's a... Okay. So, I'm not going against what you're saying, but you think about it, right? The concept is right. I put money into supplementary retirement scheme so that it somehow helps to waive off the increment of GST. But the problem is, this money I cannot touch it now, you know.
Yeah. Maybe we should explain what supplementary retirement scheme. What is supplementary retirement scheme?
I do not want to butcher this. I better go and Google it and give you the proper definition.
Okay, let's start off with the proper definition.
Yeah, then
maybe we kind of move it into a layman language. These legal terms can be a bit confusing.
Yes.
Right, can be confusing.
Okay, so essentially the Supplementary Retirement Scheme, or in short SRS, is a government scheme that helps you enjoy tax savings on the funds you contribute while saving up for a comfortable retirement. Okay, so essentially SRS account is to help to relieve some of the tax that your income tax that you are paying on a yearly basis. So of course, with that, right, the another feature of this SRS is to give you a retirement income later on, because the money is being saved into your bank account, you cannot touch it, and then when retirement comes, you can start to withdraw. That is essentially what the SRS is for.
Okay.
And of course, one fun fact. When you put the money into your SRS, so it's essentially another bank account. You can put your money there, and then you cannot touch it. At age 62, then you can start to withdraw.
62
Is
62? Wow,
yeah.
That's a long time. That's
very long for me. I'm only 18.
Okay. So how does this SRS by the government actually work?
For my understanding, for SRS, essentially it's just mainly to relieve the income tax, because I believe the government is giving you this option is so that when your retirement comes, you can take care of yourself.
Okay.
So by doing this, you are responsible for your future retirement, and in return, the government say, okay, I can relieve some of your income tax.
Interesting.
Is that correct? Mr. Investment savvy Chinese looking boy?
Wow, this one a bit racist. A bit racist. Somehow correct. But maybe let's put it down into slightly more technical or less slightly more technical but layman term, right, to understand. It's basically it's a savings account. You put money inside. For every dollar that you put in $1, the government will waive off or will give you a tax relief of $1. Not your tax minus $1, is they less off from the income that you have, and they assess the rest of it. So what does that mean? If let's say you are earning 50,000 today, right? And you put in maybe $10,000 into SRS. Okay? Here, let me take out some numbers that is easy. Okay, so let's say 80,000, right? From this particular article. $80,000, right? You are taxed $3,350. Okay?
$3,350.
Tax $3,350. If I were to put in $10,000 into this SRS account, right? This $10,000 doesn't net off the $3,000 of taxes. It reduces the assessable income from 80,000 to 70,000 minus $10,000 of assessable income. Alright? And at 80,000, it is 7% tax. So essentially, this 10,000 that you put in, you will enjoy 7% in tax relief, right? Which is $700. So that means your total tax income reduces from $3,350 to $2,650. $700. So you put in $10K, you save $700. So that's how the government tries to entice if let's say you're earning 80,000, so it is definitely based on your income tax bracket.
Do you think SRS is for everybody?
Good question. I think it's for the wealthy. I think it's for the slightly wealthier because it makes more sense lah. To be honest, you put into the bank, you put into the savings account, right, earns you 0.05%. It doesn't earn you much, right?
Yeah.
You can put into investments, you can put into savings, you can put into insurance, right? But essentially, the money is stuck until you're 62 years old. And if you don't have a certain level of income, the tax that you save is actually not a lot. So imagine you put in 10k, right? 10k of your hard-earned money and you only save $700 in taxes. Versus somebody who is maybe earning $1 million, right? $1 million and he's taxed 23%, right? So this 10k that he put in saves him $2,300 in taxes. Because it is based on your income tax bracket. So it's a lot more like worthwhile. Your $10,000 is a lot more worthwhile when you are richer and you can put into this SRS scheme.
So are you saying that I should... So in your opinion, you think that the SRS is only for the wealthy people?
It's only for the rich. It's definitely only for the rich. But if you are a layman today and you haven't opened your SRS account, the day that you open, they will look at the retirement age and they will determine when you can take out the money. Alright?
Okay.
So now it's 62, but it's going to increase to 65, 67, right? So if you can, just go to DBS, OCBC or UOB, right? And just put in $1 just to start the account. Just to start the account, right? And then you lock in the retirement age of 62.
Is there a limit for the withdrawal? That was not withdrawal, sorry. Is there a limit to deposit into the SRS?
The limit to put in, if you are Singaporean, it's 15,300, right? If you are a foreigner, it's $35,700. Okay. Why this amount? I'm not sure. I'm not sure, but this is the amount that you can put in.
No, I think I can answer that. I may not be certain, but I think the reason why foreigners can contribute more into SRS is because they do not have this thing called the CPF.
Okay.
So essentially essentially the supplementary retirement scheme is meant for your retirement. That's why the word retirement is there. So at the same time, the CPF that later on gives you a monthly income is also for your retirement. So when any Singaporeans or PRs they work, right, every month they get their salary, 20% of it goes into the CPF. Yeah, so it's for their retirement in the future. And therefore, I guess that this is the reason why there is a cap to the amount of money the Singaporeans can put into SRS. It's also because not for people to siam tax lah.
I think so.
You cannot avoid tax lah. It's a very bad thing to do that, you know. Alright, so pay your tax.
I see from Facebook before, you can do tax planning, but you cannot do tax evasion. So what we are doing with SRS is what we call tax planning, right? Tax planning. That means we plan in the best and most legal way possible to reduce our taxes, but we don't try to cheat our system out of it, right?
That's right. Don't cheat.
Don't cheat. Don't cheat, okay?
Mr. Wong will not be happy about it.
Mr. Wong, if you hear this, please come to our channel.
Do you think Mr. Wong will invite us to go and lim kopi?
Maybe in the future.
And saw our video, they call me. Derek, come lim kopi.
Maybe we treat one of our subscribers. Go lim kopi with Mr. Wong next time. If we really get that big, right?
Mr. Wong won't see this one lah. We too small already. Okay, but anyway, so essentially that's what the SRS is for lah. It's for retirement.
Interesting.
And okay, now the question is because understanding that SRS, you can only withdraw the money later on. If you withdraw, which is 62 as of now, what happens if you withdraw before that?
There will be a penalty.
What is the penalty?
They whack you with a penalty of 5% On top of that, you have to pay income tax on whatever amount that you withdraw. Unless, of course, it's for medical emergency, right? So people die, people require it for major surgeries, then that amount will be waived, the penalty will be waived.
Oh, is it? So you
Yes.
can actually waive off the penalty and also the income tax as well.
No, the income tax you'll still have to pay.
So even
Yes.
medical emergency, they will still
Yes.
charge you.
Yes.
Even my death, my family want to take out from my SRS, also they will charge you that.
The first 400,000 won't be chargeable. After the 400,000, there will be a tax. Yeah.
Okay, question. How do you waive off the penalty?
In the event of medical emergencies,
Mm.
you require the money for operation, for surgery, then you can write in an appeal in the SRS scheme to get the money out before your intended retirement age and get it out to make payment for medical bills basically.
I didn't know that. I always thought like no matter what, as long as you withdraw, there will be a penalty.
Yeah, so that's
Like regardless, you can say that my family die lah, you can say whatever lah, they will still charge you. That's what I thought lah.
very different, slightly different from CPF. Yeah.
But CPF you cannot do that also.
CPF, I'm not sure. I'm not sure. Maybe we have to do a bit of research on that, right? But I don't think we can take out even for medical emergencies. The only portion we can take out probably is just the MediSave portion.
Okay.
Yeah.
Interesting.
But talking about the CPF, right, also very interesting, right? Because recently, wow, fixed D has been on the rise.
Yes.
Crazy interest rates, right? People have been seeing like 3% 4% of fixed deposit, right?
Mhm.
And this particular thing came out very interesting in this particular article. It says that Singaporeans can use your CPF to buy Singapore Treasury bills. Why is that interesting? Because your CPF OA earns you 2.5% interest. But right now, the treasury bills, which are pretty much guaranteed, right? If you hold to maturity to the end of the term, you can actually get, the latest one is 4.4% interest
Per year.
per year.
So how many years you put in?
The T-bills, or Singapore call it the treasury bills, T-bills, right? You put in for either a 6 months or 1 year period. A very short period of time. So people are looking at taking out their CPF money and putting it into treasury bills. Quite interesting, right?
Hey,
Your thoughts on it?
you are saying that I put my money, I put 100,000 into the treasury bills. 6 months later, I earn 4.4%.
Prorated for 6 months.
Of course, if I put it a year, then it will be.
Yes. You see me deep in thought.
But of course, are you saying that this is only applicable to CPF?
CPF.
So that means you cannot use cash.
You can use cash. Definitely you can use cash.
Okay.
But you can also use CPF.
Question, what is the difference between the treasury bills and the fixed D?
Good question. Fixed deposit within that particular 6 months or a year, right? If let's say you terminate, you say, Derek got $100,000, right? Put into fixed deposit. And then say, I want to cut maybe at the 6th or the 3rd or the 4th month, maybe I need money, right? The bank will say, okay, I will terminate it for you. Depending on the banks, there may be some surrender charges, right? But if not, they will return you maybe 100,000 with no interest. Okay? The T-bills are slightly different. Okay? The T-bills, right? If you were to look at the website, right? You will notice that the T-bills, you can sell it at any single point in time within the 6 months or year at a market value. That means, right, you can potentially lose your capital within the 6 months or 1 year.
So you are taking risks.
You are taking risk, but if you were to hold it till maturity, then there's no risk. If you
Oh.
were to hold it till maturity, there's no risk. That means, for example, if I want to put in $10,000, the T-bill works like this. At the end of the entire 6 months or a year, you will get 10,000. Right? You'll get $10,000. But at the start, maybe you pay $9,600 or $9,960 maybe. So you pay lesser and you will get 100,000 maybe at the end of it. So you earn $400 in interest with your $99,600.
I see. So essentially, in a way that you will not take risk as long as you fulfill for example, the 1 year requirement.
Yes.
So now the question is, I'm interested now. How do we put money into T-bills?
Money already.
Wait, what's the minimum amount that we can put?
If I'm not wrong, right, if you were to look into the website, the MAS T-bills website, the minimum should be $1,000.
Oh, so 1,000 I can earn $44.
Yeah.
End of the year.
Yeah, you can earn $44. So that's how T-bills work versus SRS. So both SRS versus SSB, Singapore Savings Bond, right? That's another monster altogether, right? Everybody, we'll talk about that next time, right? But this is quite interesting, right? Because you can buy the T-bills using your CPF.
You can buy the T-bills.
Yeah.
So you think? I think I should do that, huh?
Yeah, and there's a Sidley article, right, that writes about what is the expected, because there's a delay in getting the T-bills. What is the worthwhile interest that you can get? So, because you won't get interest for 2 months when you do this particular T-bill exercise. First month, because they are processing, and the last month when they pay out, you won't get interest, right? So, what is let me find the Sidley article for T-bills.
Oh, I'm looking at the Sidley article.
Yeah, and it should write the percentage interest that makes T-bills worthwhile. I find it here.
You found it?
So this Sidley article writes this. If you want to use your CPF OA to invest, right, and there's a 1 month time lag, that means you buy, it takes 1 month before the entire thing is processed, versus a 2 months time lag, right? So if you were to do a 1 month time lag, a 6 months T-bill, for it to be worthwhile, your T-bill must be above 2.92% per year, which is confirmed higher than that now lah.
Yeah.
Okay? And a 1 year T-bill, 2.71% and higher, it makes sense for you to put into the T-bills. And then if you assume a much longer time lag, so a 2 months time lag, right? A 6 months T-bill will require 3.33% per annum for it to make sense. That means if you were to earn 3.33% on T-bills, it's the same as a 2.5% in CPF OA.
I see.
Right? And in a 1 year T-bill versus the 2.5% in the CPF OA, if you earn 2.92% on this T-bill, it will be the same as your 2.5% in CPF. So definitely now is a very, very good time for you to put your CPF OA money to use.
Okay.
And put it into T-bills, if you will.
I got a question.
Yes.
This is a little bit off topic though. It is still related to T-bills, but something that just came across my mind. Now, for investors like myself, right, why would I choose, understanding that the market is down, why would I choose this over my equities?
Good question. I don't have an answer to it, but this is my opinion, right? My 2 cents worth is that some people are in their 60s or 50s, right? And they are not willing to look at their capital and see it shrink over time. This may be a better way for them to accumulate wealth in a safer and perhaps I can say this, capital guaranteed manner, right? You don't have to worry that you will lose your capital because this amount you'll definitely get. So if you have 100,000 in your CPF OA, which is not abnormal, right? If you don't buy a house and you work for over 20 to 30 years, 4% is $4,000 extra interest. And it's quite interesting because because that's something that you can probably do. Versus you put $100,000 maybe into equities, maybe the next few months it's gonna crash, right? You're gonna lose 15,000 out of it. So for slightly older group of people, right? This may be a good and interesting way for you to put your money in and save up for maybe the short term. Maybe these are for short term liquid cash that you want. Put 6 months, put a year, then you can take out anytime after 6 months, a year. And you can do whatever you want with the money, go travel, all things. And if you don't want, just put it back into your CPF. Right? Easy.
Okay, I agree with you. I think that older people should not take more risks than they should, because it's closer to, they're already at their old age. I don't think they have a lot of timeline. Maybe the market is now. But okay, personally, I feel that at least for youngsters like myself, which is 18 years old, I think that this amount of money can be placed, I will put it in the equities instead of here. Reason is because when we are young, we have limited resources. So we should put it somewhere that can grow your money faster. But at the same time, right, unless you need the money within a year, you can actually put it into equity. Right? Because no matter the market is going up or down, in the long run, everybody is saying it, in the long run, it's gonna average out 10%, 8% every year.
When we're on that topic, disclaimer, this is not financial or investment advice.
No.
Please do your own due diligence.
Yes.
It is just our perspective and opinion.
Yes,
on it.
but of course, if you wish to have financial advice, you can look for either one of us. We are professional financial advisors. We're able to advise you accordingly. I'm just promoting ourselves right now. But yes, this video is not financial advice. It is just our opinion on investments, T-bills, fixed D, interest rate, inflation, anything and everything. Okay. Thank you for the disclaimer. It's necessary because people will blame us if something goes wrong.
Correct.
Okay.
So we don't want you to lose money like us sometimes, right? Each person has. I like this analogy a lot. One of the people that I follow, they actually say, you have this plate of nasi lemak, okay, and you can add as much chili to it as you want, right? Some people might be able to take like Tahan ghost pepper style chili. Can take it and can eat, and then it will burn you, but you'll still be okay, right? Some people don't want. Some people just want plain nasi lemak without chili. I don't know why you eat that, but I eat nasi lemak for the chili. So depending on your preference, right? You may want a little bit of chili, you may want more chili, and that relates to the amount of risk that you are willing to take on your plate of nasi lemak. How much you are willing to get burned to eat your food.
Wow, you make me hungry.
Aiyo.
I'm not absorbing the analogy, I'm just thinking about nasi lemak. How did we come from income tax to nasi lemak? Okay. Is there anything else you need to add on?
I think that's about it. We moving forward. What I think both of us, what we're gonna do is we're probably gonna review some articles and get some opinions from there, right? And then we'll share with you guys and see. And if you have any comments on what articles we should read, please like first, subscribe, and then comment. Right?
Yes. This is it for the Asian Flip Flops podcast.
Right.
Sayonara.
See ya.
Okay. I got it.